silver and gold had a big move up, particularly silver. Silver really broke out. It was up almost $2, I think, on the day. And it didn't just close above 30, which was a level that silver had not traded above since 2013. But we closed above 31 on that day. And in fact, on Sunday night, we spiked again and we got as high as $32.50 in the price of silver. Gold, which did not set a record high on that Friday, set a new record high on Sunday night and then another new record high on Monday. I've been telling people that they should buy more silver than gold because gold kept going up and silver wasn't. And I guess that the reason for that was that central banks were the primary buyers of gold and that they weren't buying silver. And since the general public has been selling, in fact, we've had 11 consecutive monthly outflows out of gold ETFs, indicating that investors in the US, also in Europe, have been selling, even though the price has been rising. So somebody must be buying enough gold to offset all this retail investor selling. And a lot of that is central banks. And they don't buy silver. They don't have room for silver. They're buying gold. And so I thought that silver was kind of getting left out, but that eventually, like a coiled spring, it would explode. And I kept saying, buy silver, buy silver. It's got to go up. There's no way gold's going to keep rising and it's going to leave silver behind. In fact, I know that in a real bull market, which I believe we're in, silver could lead gold. And so it's been lagging. And so I wanted my audience to buy it before it jumped ahead. Well, now it had that breakout. We've had a nice 2-day correction in price following that breakout and move to new highs. Most of the decline was today, although we had some of the decline yesterday. So I mentioned that silver got all the way up to $32.50, which is still low. It's not like that's a high price. It's just the highest it's been since 2013. Silver is back down at $30.73. So that's a pretty substantial pullback, about $1.80 or so from the $32.50 that it traded on Monday. And if 30 is now the support, which I think it is. Now that doesn't mean silver can't go below 30. But I think 30 is to silver what 2000 was to gold. Once we broke above 2000, 2000 became support. And yes, every once in a while we dip below 2000, but we never stayed below it for long and it quickly came back. So I don't know if silver is going to go back below 30. It might go below 30, but I don't think it'll stay below 30 for very long. And at $30.67, that's close enough to 30 not to worry about it. I would buy it. On gold, gold is now about $70 off the high of $24.50. It's at $23.77. I think the support in gold is moving higher. So it was 2,200. Now it's probably 2,300, maybe even a little better. So I don't think you're going to get much bigger pullbacks than what we've just seen in the last couple of days. But I wanted to reiterate that this is an opportunity to buy both metals, but in particular, silver.
Peter Schiff has been telling people to buy silver over gold because silver has been lagging behind. Recently, silver had a big move, jumping nearly $2 in a day and closing above $30 for the first time since 2013. It even spiked to $32.50 before pulling back to around $30.72. Schiff believes that central banks have been buying gold but not silver, which is why gold has been rising more steadily. However, he thinks silver is like a coiled spring ready to explode and could even lead gold in a real bull market. He sees the current pullback in silver prices as a buying opportunity, emphasizing that $30 might now act as strong support, similar to how $2,000 has been for gold. Gold also saw new highs recently and is currently around $2,377, with its support likely moving higher. Schiff stresses that this is a good time to buy both metals, especially silver.
We have inflation because we're doing so well, right? Because we have such a good economy, we got to put up with this pesky inflation. Not only doesn't economic growth cause inflation, it actually helps hide the inflation caused by the government. Because when an economy is truly growing and producing more stuff, prices go down. Now, the government can take advantage of that by creating inflation that prevents prices from going down. Maybe they stay the same or they go up a little bit. The public doesn't realize how they've been robbed, because how do you know how much prices would have fallen if the government didn't create inflation? You don't. There's no way of knowing. So the government is able to take away a benefit that you never realized that you were about to receive. So you don't know what you lost because you never had it in the first place. So the government takes advantage of that. They know, hey, we have capitalism that is lowering prices. Let's rob the public of these price cuts by creating inflation. And they won't even know that there is any inflation because, we've defined it as prices going up. Now prices are going up 2% or more, because if it's just 2%, well, it's no big deal because that's our target. We want 2% inflation. But if prices were supposed to fall by 5%, the government gets away with 7% inflation and they claim everything is great. So productivity can't hide inflation, but it never creates inflation. But that's what the Fed said in these minutes. They're thinking, oh, maybe the economy can grow faster without causing inflation. No, there is no speed. True economic growth can be as fast as it wants to be, and you're never going to have to worry about rising prices. They say the economy is really good, and they were worried about, we might get inflation. Maybe we won't, right? They're saying maybe we don't have to worry. Even though we have this great economy, we don't have to worry about this great economy causing inflation because of the productivity enhancements that are going to diminish that inflation. But those productivity enhancements don't diminish the inflation. They just diminish the price increases. The inflation is the expansion of the money supply. And the government's going to keep expanding the money supply because they got no choice. I mean, they have a choice. They just have no politically viable choice. So they're going to keep on creating inflation. And that means they're going to keep on robbing from the public any benefits that might otherwise have come their way through increases in productivity. And that is the economic reality. That's why this gold and silver rally is just getting started. And you want to buy any opportunity, any pullback. And again, I think they're going to be short and shallow because the real money, the big movement into gold and silver is underway.
Peter Schiff argues that the idea of inflation being a result of a strong economy is misleading. True economic growth should lead to lower prices as more goods are produced. However, the government creates inflation by expanding the money supply, which prevents prices from falling and effectively robs the public of the benefits of increased productivity. People don't realize this because they never see the lower prices that would have occurred without government intervention. The government targets a 2% inflation rate, but if prices were supposed to drop by 5%, this means there is effectively 7% inflation. Schiff criticizes the Fed's suggestion that faster economic growth could happen without causing inflation, emphasizing that true growth does not lead to rising prices. The government's ongoing expansion of the money supply is what truly causes inflation. As a result, Schiff believes the current rally in gold and silver is just beginning. He advises buying any pullbacks in these metals, as the significant movement into gold and silver, driven by real economic forces, is already underway.